Great. We will come to the question of the WhatsApp moment, but I just want to make clear that the title of this session is My Money. So we're going to be looking at banking and finance from a purely consumer perspective, overwhelmingly a consumer perspective. We are not going to really get into the industry issues. So I'm going to look at it from the consumer's viewpoint. And in that spirit, Piyush, if I may begin with you, I've been a DBS customer since 1981.
Thank you.
And I would add a quite happy DBS customer. But I'm very curious as to what my DBS relationship is going to be, say, 5 years from now. Will there still be branches? Will there still be tellers? Will you still have ATMs? Will I still be using your credit cards? Will I still have a relationship manager? So how will the bank serve me 5 years from now, and how will it be different from what it is today?
So let me amplify on where I started about the death of banks. Frankly, to me, it is surprising that our industry has not completely been destroyed already, because there is no industry in the world which is more likely to be dislocated by technology than banking. And that's because we don't produce anything. We make no goods. We have no this thing. Our whole function is around accounting and information, bits and bytes. Our entire industry is bits and bytes. That's what happens. Your money movement it gets debited to one account, credit account. So two people pass entries. Information flow is what determines that. So we're just the most digitizable industries. Number two, at its heart, banking is only an exchange. You take money from people, you exchange it, you give money to some other people. You take money from one person, make a payment, money transfer, give money to somebody else. It's only an exchange. In my view, the nature of banking, bits and bytes, and the exchange element of banking means the banks are going to effectively be dislocated and just become platforms. The future of our industry is just going to be one big platform. It's not going to be any different from a Facebook platform or a WhatsApp platform. That's how you got to think about the industry. And you can take that down to several levels. So today, Nandan talked about it, he showed it in the last week, and you're seeing it country by country. Electronic KYC exists. Electronic authentication exists. You don't need to go to a bank, no need physical paper. We're just launching a digital bank in India at the end of this month, completely paperless. Not 1 inch of paper, whether for opening an account or for doing a payment or instruction. Savings. Savings are going to be completely, the whole interaction is going to be embedded. People ask me a vision for DBS, I say is to make the bank invisible. I think the bank will get embedded in your life. A mortgage will happen when you're buying your house. A payment will happen when you're paying for your meal. And the dialogue will be conversational. You go and see the thing in Imaginarium, in the stand chart booth. You ask the bank, hey, did I pay my electricity bill? And it comes back and says, yeah, these look like 2 bills you might have paid last month. These look like electricity bills. And you ask verbal, did I go to Starbucks? And it says, yeah, it looks like these 3 are Starbucks entries. You'll have conversations from WhatsApp. You won't need this thing. Your investment advice will be driven by robo-advisors. We work with IBM, with Watson. I can tell you that the computer's ability to select and give you advice on what you should be investing in is far better and will be far better manifold in 5 years than any human brain. In lending, the big function of bank has been credit underwriting. I can tell you today that the algorithmic credit underwriting that platforms are doing is far superior to what banks are doing. Alibaba has a credit bureau platform in China today called Sesame. They have rated 38 million SMEs, 300 million consumers. Their loss rates are a fraction of the rest of the banking system because of the artificial intelligence they embed into the way they do their lending. Payments, I think cash is dying. Since I became a banker 25 years, the big holy grail of banking has been to kill cash. It has never happened. NFC was a problem, phone technology was a problem. Guess what? In the last 12 months in China, cash is being killed. And I go and talk to my colleagues in China, they tell me we haven't been to an ATM in 2 years. Nobody draws cash anymore because Alibaba and WeChat with barcode technology and point of sale have made a dramatic change. And then you go back to Imaginarium and you go and look at the booth called Tactone. They figured out how to do this even without NFC technology just through this thing. So the whole nature of our industry, which is facilitating exchanges, can be done electronically, and you have to think of it as a platform. I just think Bill Gates 20 years ago was prescient when he said, banking is necessary, banks are not.
Thank you. Interesting. So it's going to be a big difference. You're going to become invisible to me in 5 years' time.
I think so.
I get that. Okay. Shyam, you mentioned that you had a slightly different take on this topic. And of course, you're operating in India, where the market is quite different. You also have in India, I think, maybe 300 to 400 million unbanked consumers, unbanked people who will be entering the market for the first time as newbies, as it were. So how do you see the situation in India 5 years from now?
I don't know.
For a consumer.
Yeah, for the consumer. 5 years may be a long time to predict anything. In this space, things change every hour. By the time we are out, we are new technology. But since Piyush spoke about the Imaginarium, he forgot to mention Federal Bank. And I'll tell you why. What we have on offer is not futuristic. It's happening today.
Okay.
Sitting here, you can open an account by just taking a selfie and punching in your Aadhaar number and putting in your PAN number. A live operating account in which you can transfer money happens today. Right? Or sitting here, you suddenly forgot you paid to, your driver's telephone has to be recharged. You do a missed call, his phone will be charged. So the technology that is enabling exists. But this space is evolving so fast that it's only limited by our imagination. So what I would say is there are, I think, 3-4 characteristics that are going to influence banking. One is everything that I do every day, everywhere, already available. Right? So one is the E, every day, everywhere. The second, which all of us are struggling with, is we're all now caught up on this app space, right? Everything has to be an app. So if the bank that you bank with is becoming an app and it's on what a friend of mine famously called the 79th organ. We all have 78 organs. The mobile phone has become the 79th organ. If it's on your 79th organ as an app, then you've already crossed the barrier. The thing that all of us scared is, I think Nandan mentioned, is the electronic authentication. I think the rapid thing happening in India is over the next 2-3 years, you'll find authentication very easy. Whether it's the heartbeat recognition or your iris recognition or any other thing, authentication happens, security increases. The last is it's got to give you that experience of being youthful. So if this EASY, which is everything, everywhere, app, security, and youthful is there, I think it becomes easy. And once it becomes easy, I'm almost sure what Piyush said would happen. The only truth is in India, because of so many layers, not all will adopt at the same time. The disruption is non-linear, but the acceptance of the disruption by different segments is linear.
Okay.
So I think the people who are entering the segment probably will take 5, 10, 15, 20 years, but it may not be 10 years, maybe 25 years it could be. That's my view.
Thank you. Nithin, I have a slightly different question for you.
Right.
Suppose I'm a millennial, I'm 21 years old, I just got my first job. I've never in my life set foot in a bank branch. I don't know what they do in there. I need now to start organizing my financial life. I need some advice. You're in the industry. You run a fintech firm. My parents told me just go to DBS. You know, they're safe. You can trust them. You know, you put in enough money, they'll give you a relationship manager to hold your hand and all that stuff. But then I see some of my friends and they say that, look, you know, there's some some online-only banks which don't have these branch costs, and they can offer you much better rates, and everything is. And I'm a digital native, being a millennial, so I have no problem with digital. So, what advice would you give me on how I, being who I am, how I should organize my financial life?
Right. No, firstly, I'd say whatever a human can do, I think a computer can do better, because human typically has a vested interest in selling products which may not really be apt for you. Now, coming back to how it's in India, you know, so a lot of people said that India is not ready, you know, so for an online-only kind of experience. So we as a business are proof that it works, you know. So without any advertising, without any offices, actually, you know, we've been able to onboard, you know, 1 lakh plus clients. We do 8% of Indian retail market turnover. So I think if India is ready, I think the entire world is ready to be completely online in terms of managing finances. So and I don't think there's one product for a 21-year-old. It'll have to be based again on probably a robo advisory or something, because there are people at 21 who don't mind taking a little more risk, people who are more conservative. So there are a bunch of things that are happening, thematic-based investing, robo advisories around ETFs and whatnot, So I'd probably, I'd say a robo advisory into mutual funds is probably, because in India the challenge again is there are no ETFs. Essentially there are just 2 ETFs in the market. So even if I were to do a robo advisory, I'll have to kind of take your, ask you to invest into mutual funds, which and now in India, you have the direct plans, so where you don't really have to pay a distributor commission. So in essence, you can play an ETF kind of thing with mutual funds directly.
Okay, thank you. Right. Aman, your company runs a financial comparison website on steroids. You compare all kinds of financial products, services. I can go to your site and check which is the best credit card I can use if I'm just interested in air miles, etc. Now, in the amount of choice that you've opened up to people, the question I ask you is, what happens to loyalty? I've been a loyal DBS customer. They served all my needs very well, but now I go to your website and I see this enormous range of choice. So do you think, looking forward, people will become less loyal, maybe more promiscuous in their financial dealings? Because
so I'll answer that in 2 parts. I think first, a slight explanation of what we do. We do a little bit more than, we'd like to think a lot more, but than a comparison site. We're a marketplace, much like our lead investor, Amazon. So what a marketplace does is it matches you with eligible products rather than just gives you a list and then shoves you off to a bank site. So we hold the customer's hand. We actually process the application for the consumer and on behalf of the bank. So we work with banks in India. We work with banks as well as consumers. And a marketplace does amazing things. Actually, we're very excited. Nandan Nilekani is a sort of person our founder recently went and got a lot of advice from. He's been involved with our journey. Yeah. And we're really excited about the sort of the developments in India. To answer your question, I think loyalty is changing, period. Whether it is a financial marketplace or whether there are more players in the industry, I think consumers are changing the way they behave, right? So I am loyal to certain brands. I have an Apple phone. I'm pretty loyal to Apple right now. I'm plugged into the ecosystem. But do I really care about what washing machine I have right now or what refrigerator I have? Less so, right? So I think that kind of behavior will port across to financial services as well. So those who actually manage the overall experience of the client will benefit immensely. There are a lot of other providers who will not do that correctly and will get, as you say, commoditized. I also think in the fintech space, there are a lot of vertical providers who are very focused that will come in and actually make those people who don't focus on the end-to-end experience, their lives very difficult. Right. So I think what is happening right now, the really pivotal thing about what Mr. Nilekani is talking about is that the switching costs when you actually, one of the big things, I've spent more time in banking than in fintech, one of the big things that helped us was the switching costs were quite difficult. The switching costs are coming down very significantly. So a consumer
sorry, what do you mean by switching costs?
But the difficulty it is to move your relationship from one place to the other, right? Whether we exist or somebody else exists, it doesn't matter. The reality is, you could go to Google. People are already there searching and comparing sites. What we do is allow the banks a voice, much like Amazon does, to help address that.
Okay, very good.
Vikram, if I can
sure.
Briefly comment on 3 different things that came up.
Okay.
One is that India is perhaps, in the segments in India, perhaps less ready for the digital transformation. I don't believe that's true. Yeah. I think the application and choice of WhatsApp and the proliferation of the smartphone is demonstrating that the lowest segment in India is willing to go online. And its age is not a barrier. My 80-year-old parents are doing WhatsApp, FaceTime, everything they all learned in the last year. So in fact, I think the low value, broad use of smartphone will democratize the ability to access finance. We chose to launch our digital bank in India over China, Indonesia, Singapore, Hong Kong, is because the enabling infrastructure in India, the soft and hard infrastructure in India, is the best in the world right now. It includes the soft infrastructure. So I do think that, Shyam, you'll be surprised by how rapidly the JAM account, the Jandhan, the Prime Minister Jandhan, this is 200 million accounts. Yesterday, those of you heard Nandan Nilekani, quick this thing. He talked about the JAM Trinity, which is the Jandhan account, the Aadhaar ID, and the mobile phone. That's what he called JAM. The JAM Trinity is incredible. On top of that, India, they're building 4 public utility structures. They're calling these 4 stacks: a payment stack, a KYC stack, a data consent stack. Nobody else in the world has that, because these utility, what in India is being built as a utility infrastructure, is owned by private enterprises in China, America, etc. Yeah. My belief is that this jam with these stacks is going to make what you said, switching and the ability to access finance, incredibly easy in India. Second comment, your comment on trust. I think trust is important. Today, banks have a huge element of trust with serious money. So I ran polls several times. If it's, $100, $200 bucks, people will keep it on Apple or Facebook or whatever. If it's $1 million bucks, people want to keep it in a bank. I think part of that is legacy, part of that is regulatory oversight. I think in 10 years, that will change. I think people's confidence and trust and leaving money with the Apples and the Alibabas of the world will improve dramatically. And finally, then this whole issue of what drives loyalty then? The truth is, people are loyal to Facebook. People are loyal to WhatsApp. People are loyal to WeChat. So platforms can build loyalty. And the essence of platform loyalty is 2 things. One is network externalities. The bigger the network, the greater the loyalty. So because network impact is exponential. Second is UX and customer experience. If you can create really good customer experience and you can create really convenient customer experience, embedded and seamless, people will stay with you. So your whole notion has got to be, how do I become a platform which is used by a lot of people, which grows by itself and makes the use of the platform completely convenient and seamless? Then you can build loyalty.
Yeah. But Piyush, this raises the issue that, okay, if the platform, the ubiquity of the platform is the central thing, then as some people suggest, won't banks and fintech companies become slaves of companies like Apple, like Amazon, like Google? These are these people control the customer experience. So these people, wouldn't they be the platforms that people go to? Why would they go to some bank's platform?
You would have, if I'd asked you this question in 2007, you would have said Nokia, not Apple.
Okay.
So what happened? The big thing with technology is that it is very easy to displace the incumbent. It could be the bank, but it could also be the non-bank. Do you know the biggest e-mall in China today? Everybody knows, Alibaba. The second biggest, JD. Do you know number 3 and fast getting to number 2? ICBC Bank. Okay. ICBC Bank 2 years ago set up an e-commerce mall. Today they sell Prada, Gucci, cars, houses, everything on the mall, and they pump financing into it. How can a bank become an e-commerce mall? But they did it in 2 years. I believe that banks have a lot of good things going for us. We have, your father or your mother told you, hey, DBS is safe and good. That's a tremendous strength. So I have an inherent sense of trust and loyalty. I have pipes built into clearing and settlement mechanism, which is difficult for others to replicate. Apple Pay comes to us. Alibaba comes to us. How do we make sure our pipes are not commoditized? Right? But there is an opportunity. Right. We have an understanding of risk, credit. So we have a lot of strengths. How do we take those strengths and leverage them so we can play the game of Apple and Google? Right. That is the challenge.
Right. If I may add to that, I mean, I think what you saw with the iPod, Apple, really got one over the music industry and really changed the game there. But I think even if you look at Apple and what they've struggled with the video after music, it's because actually other industries have also wisened up about sort of sharing, and maybe slightly later to the party, but we've also realized how to share value and demand that share of value. And I think you're seeing that. Apple Pay is a great example of how that's been playing through.
Right.
Vikram, you spoke of loyalty.
Yes, yes.
See, just like we all follow, the industry follows the smack. Remember, the customer is also exposed to the same opportunities. Customer will start segmenting his institution that he wants to go to. We use data to segment. Customer starts using data to segment, saying, okay, this bank or this institution is good for credit, this good is for deposits. So I think the loyalty will become to not the institution, it will be to the service that he wants, which maybe DBS could be the best at something else, somebody else could be the same. So I think the segmentation that we all learn as an industry practitioner, the customer is doing it himself.
Yes.
Knowingly, unknowingly, the data is with him. So I think the loyalty will shift to the category and the service that he wants.
Right. We have limited time left, and I've got a number of questions here. So I think let's at least get to some of them. I think one which is probably very important at this time is security. I think people worry about that. And we've had these instances of hacking and the Panama Papers and Sony and all these companies have been hacked. So the question here is, how does one ensure security, especially when we hear about these hacks, where data of millions of consumers are stolen from both a retailer and consumer viewpoint? Is this a chicken and egg problem?
Right.
Anybody like to address?
Yes.
Nithin, yeah.
So, firstly, in terms of the India context, so I think our regulators in India, SEBI has done an amazing job in terms of ensuring. It kind of sometimes stifles innovation, but then I guess all the checks and balances sometimes ensures that these kind of things don't happen. So firstly, in terms of security, in terms of money, I guess that's more apt here than data, because how can someone feel safe keeping his hard-earned money and his life savings with a broker whose face is never seen, and then who never advertises or doesn't come with a pedigree brand. So I think it's one thing that I've realized is that as long as you give a value proposition to the end user, and then you ensure you don't cut corners, and today technology can give you the leverage to ensure that, you don't compromise on security as well. So
can I give it?
Sure.
I think I've worked with banks and fintech companies more recently, and I think as Piyush said, I think I'd be very comfortable leaving small value amounts of money with Apple or somebody else. But when it comes to tried and tested ways, I would personally, as a consumer and what I've seen, be much more reliant on banks which are much heavily regulated, and there's actually precedence around that. I do think that fintech companies do fly closer to the wire on this stuff. So I do think that, and it varies. So I do think there's an opportunity for banks, but also for fintech companies to get more mature. I also think regulation in this area is required to some extent. I mean, the Indian regulators just regulated. It's the first regulator in Asia, I think, if not the world, to regulate around account aggregation, which is incredibly powerful. They set standards around data. So I think that, to the points of the panelists earlier, they're doing some incredible stuff in India.
Right. But although you're saying that fintech companies fly a little closer to the wire, but there have been a lot of hacking of banks.
So if I can come at 2 penny bits to this thing, I think data security will be one of the biggest challenges for humanity over the next decade. The other is going to be data privacy. They're not the same thing, though they're similar. I think it's very hard to get around data security, but that's not just true for big companies, small companies, your personal life, the power station, the hospital. Everybody can get hacked and will. My going in premises is not a question of if, but when you will be. You have to make every place, you have to put perimeter defenses, but more importantly, you increasingly can use data analytics to keep sensing devices. So what we do is we try to block the walls, we put moats and barriers, but we have very strong algorithm to say we can sense if something did go wrong. I know how you behave, my computer algorithms know what you normally do. If something unusual happens in your account, I will know, hey, this doesn't look right. So we have second-level defenses which are based on data analytics and understanding patterns. Despite that, the bad guys are out there, and the bad guys are continuing to stay in the game. So we just work very, very hard to stay one step ahead of the bad guys.
Hope you succeed, yeah. We're fast running out of time. I'm sorry that the sessions have been cut down because I think they wanted to accommodate one more session. But let's try and get get this question out of the way. Blockchain technology and cryptocurrency, Bitcoin, and things like that. How do you see this changing the industry? There's a question here which has got quite a lot of likes. Who would like to just, in very simple terms, explain what blockchain can do? Anybody?
I can. The notion of, I think it's quite important.
Yeah.
The traditional notion of value in the world is driven by a central ledger. The bank keeps a ledger where we record who owns how much money. The central banks keep a ledger that records which bank owns how much. And the Register of Societies keeps a ledger which says who owns which house. So all value in the world is created through central hubs and ledger keeping. Right. A blockchain creates a distributed ledger. You don't need a hub. Everybody keeps account of everybody else's ownership. That destroys the notion and the architecture of ownership today. You don't need a exchange, you don't need a registrar, you don't need an owner society, you don't need anybody to keep track. Everybody's keeping track in real time. The construct of that is immensely powerful. In real time, simultaneous, distributed record keeping with authentication. That can change a lot of stuff in the world. The notion of cryptocurrency, Bitcoin, is just one of the use cases of a distributed ledger. In the short term, I think cryptocurrencies are hard because they impinge on monetary policy of central banks. My own sense is, though, that central banks will start issuing cryptocurrencies. Right. Central banks were originally gold standard, then they went to fiat money. There's no reason why MAS should not issue the money in crypto form, in digital. The day that happens, cryptocurrencies will take off.
Wow, cool. Anybody want to add anything?
I think he very right. Only thing the regulators may choose to be a little more cautious given
That's true.
Yes.
given all the noise that surrounds it. But
Yes.
I think it's inevitable. Someday this is going to happen.
Watch
The
the
disaggregation
Canadians.
is real. It's only how fast and when.
Right. We have just above 1 minute left according to the clock. So I'm just going to pose the question that Nandan Nilekani posed, which is, have we really arrived at the WhatsApp moment in finance? Just to, in case you're wondering, the WhatsApp moment is when WhatsApp basically disrupted the telco's traditional SMS business, which by and large has been largely demolished by apps like WhatsApp. Now, maybe that's not quite a good analogy for banking because banks have not, I mean, you could call it a Uber moment because Uber also did disruption, but it did not demolish traditional taxi companies. So, and as of now, fintech has not demolished banks, not at all. So I think banks are still very much around. So maybe the question should be, have we arrived at the Uber moment where more and more and more and more business is going to be taken over by fintechs? I think, Piyush, you've already answered. You think we've way across that?
I think we are, but the notion to me, which is why I want to underline one thing. Your definition of WhatsApp moment is the disruption of the telcos by WhatsApp. My definition of WhatsApp moment is a transformation of the messaging industry.
Okay.
And the difference, I don't like disruption because it assumes replacement of the incumbent. I like transformation because I think the incumbent can drive the transformation. Okay. I think we have reached a WhatsApp moment because transformation is on us.
But Piyush, in the case of messaging, the incumbents never drove any of the transformation.
Well, that's true. So I'm not saying incumbents can or cannot. I think there's no reason why incumbents. Nandan said in his thing, the technology is available to everybody, including the banks.
Including the banks.
The only reason that somebody else wins and somebody loses is mindset, attitude, speed, pace. There is no reason why an incumbent can't have that.
Right. Any views on?
I'll give you simple. The app is installed. The users are not there yet. It's not yet at the billion users. So there is, what I mean by that is I think the enabling environment is there. It'll be interesting to see how it plays through now. I don't think, to Piyush, I don't think it's as simple as Uber or WhatsApp.
Yeah.
I mean, less than 1 million Indians actually invest in the markets actively today. Can it be 100 million? Yeah. I think in the next 3 years it can. I might have a vested interest in saying it, but you know, SEBI just gave a green signal on e-signature last week, right? And easy onboarding, you know, I mean, you can't have a WhatsApp if, you know, you need someone to sign, you know, documents, you know, so I think, yeah, I think we're here, you know, so, and I think, you know, 3 years from now, it'll be a lot more different, you know, than what it is today. So.
Right. And Shyam, you know, what interests me about the Indian situation is I think that there's so many unbanked people. And so just like a lot of people in India went straight from having no phones to smartphones. They skipped the whole stage of landlines, sort of feature phones. They went straight from zero to smartphones. And I think a lot of people might even go from no organized retail to e-commerce, skipping the stage of sort of physical malls totally. Similarly, perhaps, I don't know if you agree, but will they go from no banking to digital banking, skipping the total, all the branch?
3-4 years, this is happening in a very pronounced manner. If you were to open an account in India, you would go to a branch or a branch would come to you and you'd fill forms.
Yeah.
To the relatively underserved and less educated, there is no such form filling. It's a thumbprint, a handheld device, a banking correspondent goes to the customer under a tree in a panchayat, he takes the thumbprint, takes the biometric, opens an account, and cash comes to him, cash goes from him. So he doesn't even see a branch. So from that point of view, it's happening. Right? The fundamental issue in this whole thing is the technology, like everybody says, is available. Who adopts, who is going to put it in place, and who is going to take it on. The evolution of services that you use in banking, and today we see banks in a very conventional fashion. That is what is going to change. I think the definition of banks will change. People will get onboarded in the most convenient manner if you know less. Just like the verger story. He did not know how to read or write. He became what he became. Otherwise, he would have been a verger. Similar thing. A guy doesn't know how to read or write, and he ends up opening an account with no fuss. You know how to read or write, you have to go through a complex process of opening an account. Right. That simplification is happening.
Vikram, in the last year, I know we run out of time, all kerosene subsidies in India are going direct into the digital account of the lowest this thing. In the next 12 months, that will happen to diesel, it will happen to fertilizer, it will happen 12 months. Everything's coming to his phone. And this is the poorest of the poor. So what is left?
So he doesn't need to see the inside of a branch, ever. Anyway, I'm sorry, folks, we could go on. I mean, there's so many issues to discuss, but I'm afraid we're out of time. But thank you for listening, and let's give our panelists a round of applause. Thank you. Thank you.
Thank you very